name's Anna Sarin. I'm Director of Listings Development with the Canadian Securities Exchange. And today I am joined by Scott Eldridge, who's President and CEO of United Lithium, and Jason Bernard, who's President and CEO of Foremost Lithium.
Hello.
Thank you for joining me, gents.
Hi, everyone. Thanks for having us.
I just want to mention, I'll mention this again at the end, we did have the opportunity to do a nice, big, full podcast all about all things lithium. It will be out next week on CSC TV, so if you go to CSC TV on YouTube and subscribe, you can get the full podcast there. Today, we're just going to dive a little bit into them and a little bit on lithium, but if you want to know more, next week it'll be out on our YouTube page. So why don't we start, Jason, why don't we start with you? Tell us a little bit about yourself and about Foremost Lithium.
Okay, hello. Thanks for joining us. I'm Jason Bernard. I'm the CEO and President of Foremost Lithium. Foremost Lithium, symbol FAT on the CSC. And recently we listed on August 22nd, actually, of 2023 on the NASDAQ, and we are under the symbol FMST on the NASDAQ. Myself, I come from capital markets background. I was a stockbroker starting in my 20s and finished up with Canaccord Capital in 2004. I then started financing all things mining and exploration, leading me right up to the point where I am almost a 10% owner of Foremost Lithium. I became president and CEO of the company to list it on the NASDAQ and to go execute on its lithium exploration path. Foremost Lithium has 4 distinct lithium properties in a mining-friendly area in Snow Lake, Manitoba. Snow Lake, Manitoba, decades and decades, almost 100 years of mining activity. In fact, Hud Bay, just 15 miles away from where we drill off our lithium, has a mill there in Snow Lake. This is an hour and a half east of Flin Flon. So location very important when it comes to hard rock lithium. We have 43,000 acres there, 4 distinct properties. They're called the Lithium Lane properties. We have a flagship property where we have a lithium inferred resource on Zorro. We have 16 pegmatite dikes on Zorro. We've got a lithium reserve on Dike 1. So 16 more to go. We've actually made a discovery on Dike 8 there. We also have, with our other 3 large properties, enough pegmatites to take us up to 40 pegmatites. So we have Jean Lake, where we have recently hit lithium as well. And we recently hit a gold discovery, 7.5 grams per ton gold, over 7.5 meters. Foremost Lithium has 3 tailwinds, drivers of growth to create shareholder value for its investors. One is we're going back in. If you were to read our news releases, you would see we're going back in to drill off more reserves at our Dike 1 and other dikes on the Zorro. So the idea is you increase reserves in the lithium space, and you should get the corresponding shareholder value and hopefully share price increases that come along with that. So number 1, tailwind, growth, increased reserves. Also, we off that reserve have the ability to direct ship ore to one of the only 2 hard rock lithium concentrate mines in North America, that being Tanco, T-A-N-C-O. You can Google it. It's the Tanco mine. It's in Manitoba. It's actually been in production with lithium concentrate for about a year and a half now. The only other lithium mine, of course, is the NAL mine in Quebec, owned by Sayona and Piedmont. So having that mine in the area allows us to direct ship ore. So you dig it up, crush it, and send it, and you can get a revenue stream going. We have a plan to get a revenue stream going by Q2 of 2025, which is pretty quick in the mining industry. That's the second driver, the direct shipping ore, which would give us a revenue stream. The third driver is, of course, discoveries. Everybody likes a discovery in the industry. So we'll go to our Jean Lake, we'll go to Grass River and Peg North, and we'll continue to drill and explore to find more discoveries of lithium off our pegmatite dikes. The company also is an asset-rich company. We have an asset that the company originally went public on in New Mexico. It's called Winston Group of Properties. This is an old silver gold situation that was in production in the 80s and is a high-grade vein system. The company currently gets no value for that asset, so we've talked in previous news releases about possibly monetizing that through a spin-out, so that'd be a dividend share to Foremost shareholders. As well, in the company, we will be upcoming this year continuing drill programs on Jean Lake, as well as going and drilling off at Zorro. So that's three tailwinds. Our company also, being listed on NASDAQ, has the ability to go and market itself to a very large market down in the US. We're looking forward to doing that. Very tight capital structure, only 4.8 million shares outstanding. We've been increasing our advisory board so far as our geological people. We recently brought on Jody DeRouge of DeRouge Exploration, who will be running our drill programs and our exploration. DeRouge Exploration, famous for finding the Corvette property and drilling off reserves for the Patriot Battery Metals Company and success story in Quebec. So we'd like to duplicate that success in Manitoba. And that's basically a synopsis of our company. And I'll turn it over now.
Thank you, Jason. So the properties that are mainly in the lithium space are in North America. Now we're going to take a little bit of a trip across to Europe, and that's where Scott's going to tell us about United Lithium. Thanks, Scott.
Thank you, Anna. Hello, everyone. I'm Scott Eldridge, President, CEO, and Director of United Lithium. We're listed on the CSE under the ticker symbol ULTH, and we are a lithium explorer and developer. We have 5 projects spread across the US as well as Europe, in Sweden and Finland, but our flagship project is in Sweden, and that's what I'll talk about a little bit today. So in terms of my background, I've been in the metals and mining industry for 15 years. Started off as an equity buy-side analyst for a German precious metals equity fund. From there, I went on to run my own merchant banking firm, raising European institutional capital for Canadian mining companies. I've raised a couple $100 million over my career, anything from exploration equity up to debt for project financing. And then for the last now 7 years, I've been on the issuer side of the business, having held various director, CFO, chairman, and CEO roles with public companies. I was the CFO and VP finance for Amarillo Gold, a company that developed gold assets in Brazil, and we were taken over by Hochschild. More recently, I joined the Bowring Group based out of Vancouver here. Some people would recognize that name. And I'd like to point out that United Lithium is not our first lithium company. It's actually our third. The first one, Millennial Lithium, we developed an asset in Argentina, a brine deposit, and we sold that for $500 million in early 2022. And with that success, we went on to keep that momentum going, and we started a company called American Lithium, which I share offices with here in Vancouver, multi-$100 million market cap with development stage assets in the lithium space and also NASDAQ listed. So with those two companies being so successful, all of those lessons learned have been directly applied to United. It's the same group of directors, the same founding shareholders, the same principles, the same practices that all trickle down to United being the third leg of the stool, and we're at 20 million market cap. So again, watch our ticker symbol, ULTH. So to dive into the assets, as I said, we have 5 lithium projects. They're all hard rock pegmatites. That's the common denominator across the portfolio. But we are focused on Sweden, which is our flagship asset. We recently just finished a 5,000 meter drill program there where we've only published 24 out of the 60 holes. The range of results were anything between 1% and 2% lithium oxide, which is excellent, over widths anything between 10 and 47 meters. So although we don't have a resource here, what we're seeing here is a highly economic future deposit. It's all close to surface, and it's encompassed by world-class mining infrastructure. And that's no exaggeration. There's a highway that goes through the property. It's 2 hours north of Stockholm. There's 2 power lines that go through the property. There's a rail line. One of the ports that we have access to is a kilometer away from one of the pegmatites. A second port is 25 kilometers south of the project. So we couldn't ask for a better infrastructure setting. And this today contributes to low-cost exploration, but come the future of the project, this will contribute to a lower capital cost as well as a lower operating cost. And on that topic, we're in Vector 2 of the Swedish power grid, which is 100% renewable energy. So our power costs here rival Quebec and Brazil, where we'd be paying 7.5 cents a kilowatt hour to operate a mine. So significant cost savings there when we're in a low power jurisdiction. Sweden itself, I would argue, is the top mining jurisdiction in Europe. It has the most operating mines of any country in Europe at 12. And we think of household names like Boliden, LKAB, Lundin Mining. These are all Swedish mining companies. It's a very pro-mining country. And I won't dive into it now, but Europe is about to adopt the Critical Raw Materials Act. That's the European Union's version of the Inflation Reduction Act in the US, and I'll talk later about the many benefits that will bring to our company. So in summary, again, drilling away on our flagship asset in Sweden. It's a great place to work, low-cost labor, low-cost drilling. We're drilling for under 300 Canadian dollars per meter. There's no helicopters here. I call it Volvo access. So we're very excited about the future of the company, and our insider group controls about 40%, which is very important for investors to see that.
Awesome. Thank you, Scott. We don't have a ton of time left. Again, I encourage you to go and check out the full podcast. It'll be out next week on CSC TV. But the one thing I do want to talk about while we still have a few minutes left, I think probably the most valuable topic around lithium is we are witnessing the electrification of society. And that really is driving the force for lithium. So I'll give you each a few minutes to touch on that. Maybe Jason, we'll start with you, but just talking about supply demand issues and things that are the bottleneck that's happening and the long runway perhaps for lithium. Do you want to touch on that?
Yes. Well, I feel that yes, we're going to need a lot of lithium to supply the electric vehicle revolution and sort of the green energy shift. So I feel that there's a larger super cycle going on in lithium. Of course, you'll get volatility in mini cycles as you drive forward in that super cycle. Currently, lithium has corrected quite a bit, and that's come from there was a very high price in lithium carbonate and lithium hydroxide that brought a lot of production on stream, but mostly, especially in China, they started to hoard the lithium. This happened after COVID, and there was huge demand for electric vehicles, and they thought, oh, where are we going to find the lithium? This hoarding of supply has now come on the market, and it's brought the prices down. So hence the sort of mini cycles within super cycle. Now China has probably went out of its way, I feel, and it's not necessarily a conspiracy. There's facts to back this up, but they're putting a lot of cheap, not quality lithium on stream, especially in China, that pollutes and is not good for necessarily high quality batteries. That said, the demand will carry on, and what we would like to do, obviously with geopolitical situations in North America and in Europe, is onshore the supply chain for EVs. So the Inflation Reduction Act gives green credits and tax credits. You can get a $7,500 credit up front for buying a car with 80-90% of its sourced materials for the electric car coming from North America or free trade partners. So this ex-China processing that is necessary is not really up and running just yet. We're seeing a lot of investment in electric vehicles here in North America. Electric battery makers, as they come on stream, there's going to be huge demand locally, and there should be a huge investment to come into North America to basically back up that supply chain. So that's what we're expecting. So North America, you can sort of separate from the world insofar as where we want to source from North America the lithium, which is the beginning of how you go and build an electric vehicle battery. So
absolutely. And Scott, on that note, speaking of Europe, because I think Europe is potentially ahead of the curve a little bit in the electrification process. Is the manufacturing and the processing going to start happening within Europe, do you think? Do you see that happening?
I see it happening, but it's going to take time.
It's gonna take time.
Both the U.S. and Canada just wrote them together, as well as Europe. We're all playing catch up to China. Everyone knows that on the mining and the processing
In
side.
many senses of the word, probably.
Yes.
Yeah.
And the legislation where you're seeing government support that's trickling down to the industry and then the end purchasers of EVs, that doesn't happen overnight, but that's happening now in the US with the Inflation Reduction Act. And in Europe, Q1 here, there's going to be the adoption of the Critical Raw Materials Act, which is Europe's version of what's happening in the US. And Europe is really pushing for the domestic raw materials supply to be mined on the continent. That is not happening right now, point blank. There's a couple of lithium mines in Portugal, but they feed the ceramics industry. So there's not one lithium mine in Europe right now for the EV sector, but it is being built right now in Finland by a private company called Keliber, and they have a very significant valuation with an investment from Sibanye-Stillwater, which is publicly listed. They paid 440 million euros for 80% of that project, and we see that as a geological and a peer comp to what we're doing. But just circling back to the real question, the goal of Europe is to have 10% of their critical raw materials mined on the continent. That's almost a rounding error. But even to get to 10 will be a strong feat to accomplish. But there's a lot of equity loan grants. We're getting our metallurgy paid for right now by the European Union. So all of these policies are trickling down. And Europe sort of uses Norway as the benchmark for the world in terms of the adoption of EVs, where new vehicle purchases in Norway are now about 88% electric vehicles. So there's a leadership coming out of Europe. They're usually the earlier adopters versus Canada or the US when it comes to the technologies supporting the green revolution. And it creates an investment climate where us as investors, this creates opportunities for us. And with the low right now in the lithium price, it all of a sudden has made lithium equities very affordable. So again, this landscape has created what I would consider to be a buying opportunity for anybody looking at lithium stocks, and we give exposure to Europe. There's very few companies that are exploring in Europe for lithium right now, so there's an opportunity for United to stand out.
Fantastic. And obviously the future needs of lithium, at some point the trickle-down effect will happen for the exploration. We'll start to see an influx of capital for the exploration because we're going to need to find discoveries, right? That's the next step that we need.
Yes.
Yeah.
Yes, the any kind of normalization in the price, which I feel is sort of artificially being kept low by China. China is not, they're not excited about all of the infrastructure for the electric vehicle and all the battery manufacturers and all the components that will be, that are shovel ready and being built in North America that we will have to supply. Whether in Europe or in North America, we will have to supply the lithium for. Yeah. So any normalization, and we could see very quickly lithium being the commodity of 2024. Yeah. It's that low. So.
I agree. Listen, we're out of time. I knew 20 minutes wouldn't be enough, so I'm glad that we recorded that podcast. Make sure that you check it out. If you go to the CSC.com, all of our issuers can be found. They each have their own page, all of their contact information. If you're interested in the lithium space, I encourage you to reach out to either Jason or Scott because they know their stuff, and it's a very interesting market. So it'll be interesting to watch in the next year. Thank you both.
Give me a call.
Thanks, everyone.
Thanks, Anna.
Thanks, Anna.